Take a listen to this.
NVIDIA CEO Jensen Huang giving credit to the EV maker Tesla. The CEO telling Yahoo Finance Tesla is best positioned in self-driving technology. Take a listen.
Tesla is far ahead in self-driving cars, but every single car someday will have to have autonomous capability. It's safer, it's more convenient, it's more fun to drive, and in order to do that, it is now very well known, very well understood, that learning from video directly is the most effective way to train these models. We used to train based on images that are labeled. We would say, this is a car, this is a car, this is a sign, this is a road, and we would label that manually. It's incredible. And now we just put video right into the car and let the car figure it out by itself.
And for more, let's bring in Autoblog Editor-in-Chief Greg Migliori for his reaction. Greg, great to see you. So, NVIDIA is perhaps one of the biggest bellwethers for the market right now, but Jensen also having some high praise for Tesla there.
Hey guys, good morning. Yeah, he is clearly bullish on Tesla's approach to self-driving cars and just their entire business model, which, many people, including many investors, are. I would raise a little bit more skepticism. I think while many cars will have self-driving capability at some point in the future, I think what we've seen is consumers have been slow to adapt to it, even slower than perhaps embracing EVs and hybrids. I think there's some pretty, significant skepticism in the market for autonomous vehicles. I think there's going to be a significant learning curve.
And Greg, talk to us a little bit more about that, just in terms of when we talk about AI in the auto industry, what is a more realistic viewpoint then, I guess, from your perspective? And then ultimately, as we take a longer term approach, what you think that growth and demand is going to look like for some of these chips that obviously are necessary in order to, are critical for these automakers' AI goals?
Yeah, I think that's a great question. I look at it more of like a 5 to 10 year sort of time frame where we'll see these chips and then the technologies that they can power phased into different vehicles. And I think you'll see existing autonomous driving systems like Tesla's full self-driving, as well as other programs like General Motors has a feature called Super Cruise. I think you'll see those systems get increasingly more powerful. And then you'll see some of the features that are a little more basic. Things like lane keeping assist, blind spot monitoring, automatic braking, those features that are a little more like tertiary, but still important, get more powerful and more helpful to the consumer. And I think it'll be a longer runway. I think listening to the comments there, that's a very bullish view. And I don't necessarily think that's going to happen in the near term.
Tesla has perhaps been cementing itself as one of the de facto full self-driving or autopilot, full autopilot plays right now. But the stock has had a rough time this year, to say the least. So how quickly does all of this need to materialize for Tesla, for Elon Musk to be able to reap some of those longer term benefits that they continue to sell to investors out there?
Yeah, I think this needs to come to fruition, at least details of the plan. And he's going to reveal some of it as soon as August, apparently. So I think if he can articulate his vision for this in a more concrete way, by the end of the year, I think investors and consumers will be reasonably patient with him. I think the reason he took so much criticism earlier in the year is there is skepticism around self-driving cars. I've driven many of them, and they are great. I think they just have very specific use cases. And I think Elon is trying to bring this to the masses, which is a much tougher case to make.
Great. Let's take a step back and just look at Tesla overall right now. We got the European sales numbers out earlier this week showing a decline in demand, and this comes on the heels of the recent data that we got out from China. Just give me just your sense of what that demand picture looks like and whether or not Tesla is really out of the woods yet when it comes to some of those challenges that they have been up against now for quite some time.
Yeah, so I think Tesla is I think they're at a pivotal moment this year. I think they really need to, again, articulate what they're doing with autonomous vehicles because they've made that a pillar. I think consumers in the market were more willing to accept just details on the Model 2 or a lower cost model, which is, in my mind, kind of a safer play. It's like just a lower cost car, something perhaps below $30,000, $25,000 that people are familiar with. That's what people were expecting. So, I mean, naturally, Elon Musk does something totally different. Let's make the cars drive themselves, right? So I think he needs to kind of bring together all these parts of his plan in the next probably 6 to 8 months, and sort of explain himself. I think right now he has sort of thrown out some crumbs. He revealed earlier this week that they're doing more advancing the semi program, which is significant. He mentioned earlier this year about the Tesla Roadster. It's going to be even quicker than he mentioned. The 0 to 60 time is just a crazy figure. So he's sort of giving us little nuggets, little breadcrumbs. But I think in the next year, he needs to really bring it all together because the results, the sales figures, they've been pretty uneven.
Yes, nuggets, breadcrumbs, and cloaks over top of yet to be announced vehicles. Greg Migliore, we've got a lot for Tesla to ultimately deliver here going forward. Appreciate you hopping on with us, Greg.
Let me know what you think about that clip down below in the comment section. The catalyst that we have upcoming for Tesla stock, the first of which is June 13th. That is the shareholder meeting. And most notably, the big really catalyst for June 13th is Elon Musk's 2018 comp package. If that gets reinstated and approved, that paves the way for a new comp package to be set forth for a vote by shareholders. The next catalyst we will have is around June 20th. That is going to be Tesla's next earnings, and I think Tesla's current quarter, this quarter's deliveries are going to come in better than expected. Margins, I don't know. Tesla's buying down the interest rate right now, so that is kind of like a price cut, little bit different, but it still does cost Tesla money to offer that 1% interest rate on the Model Y. Next up, we have July 31st, in which I believe that is going to be the first cut by the Fed, and that could be also very exciting for Tesla and really other interest rate sensitive stocks, as long as we are not going through a recession or something around that time. As long as the Fed is not cutting because the economy's bad, then stocks should do well off the first cuts from the Fed. And then obviously, as that clip just went over, we do have a huge catalyst on August 8th, and that could really put robotaxi and full self-driving on the radar for institutional investors in mass. A lot of them just see, hey, a small subscription service, business right now that is really not materially adding to Tesla's profitability in any kind of large way. We could get a vision painted for us of just how large robotaxis and autonomous driving capabilities at Tesla could become. And maybe Wall Street might start to realize that and pay more attention to Tesla following August 8th. Now, again, around June 20th, when we have Tesla's current quarter, this quarter's earnings, we're hopefully going to get more clarity on what the take rate now looks like for full self-driving. And that could also be another big catalyst as well, embedded within, Tesla's next earnings roughly around July 20th. So if you mix all of these catalysts together, that's a pretty good setup for the next couple of months. Tesla's Megapack X account shared this image of a massive Megapack facility. This is a 300 megawatt / 1.2 gigawatt hour site of Megapack power capabilities. That's insane. Look at how many this is. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 by 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. This is 160 megapacks alone sitting right here, times about 2 million. I guess it's only $320 million, but that looks like a lot of megapacks for just one location. On that note, I also think the energy business at Tesla is very underappreciated as well. Over time, I think the energy business can even be a larger business than the auto business for Tesla, especially if there is some sort of, maybe partnership with energy companies, or Tesla going out and creating their own, energy company, not just selling the mega packs to companies, but actually, creating a facility like this, right? Recurring revenue from maybe solar energy, something along those lines. There's so many different, even potential, hybrid business models within the, megapack business itself longer term that I do not think is appreciated at all today by the markets. And hell, it's already Tesla's highest profit margin business. In other news, last week, 50% of China's vehicle sales were energy vehicles, NEVs. It sold more than internal combustion engines, hitting 50.2% for the first time. The penetration rate in China is very fast. It took 10 years for the NEV penetration to exceed 1% in China. That was 2005 through 2015. From 2016 through 2019, the penetration rate reached 5% in 3 years and has now increased tenfold in just the last 5 years. This is the realization of the national planning goal 11 years ahead of schedule. We do have some videos out of FSD 12.4, some of the first people that have started to get this, and apparently it is much better than 12.3. As Tesla Chan here says, this is the first impression of FSD 12.4, which we can see. It's as soft as walking on butter, and it should be available to FSD owners here pretty soon. And this is a clip from that 30-minute long first impression video, and you can see it backs right into a parking space. I mean, pretty effortlessly. I mean, that's impressive. Yeah, I mean, you gotta give it some credit there. That was really good. As Tesla Chan here says, Auto Park of FSD 12.4 is better than me. Yeah, could be better than me too. Gary Black writes on X, attached here is my long-term Tesla forecast. For years, I have insisted that Tesla will not achieve 20 million deliveries by 2030. I am at 8.8 million for 2030 deliveries versus Wall Street at 4.6 million deliveries, and have been attacked by Tesla Uber bulls as disparaging Elon. Now those same bulls are finally coming around and saying Tesla's unlikely to sell 20 million EVs per year by 2030. Are these toxic bulls now disparaging Elon because they agree with management's forecast? No, the whole argument is absurd. And no matter where you sit, who cares, okay? Who cares? Don't argue with people online. Don't be mean to people online because they have a different opinion than you. You actually need bears or people with other alternative opinions, or you will always be set in one direction, right? If everyone's always bullish, you're always going to be bullish as well. If you never hear a different opinion, you can never get a different perspective. You will never learn, grow as a trader, investor, or human for that matter. But on a more specific note, Wall Street is only expecting 4.6 million deliveries for 2030. We're going to make so much money in Tesla stock. It is ridiculous. That means even if Tesla can only sell 5 or 6 million Teslas by 2030 per year, that's still much better than what Wall Street is currently expecting. And I imagine Tesla's probably going to be at 10 million deliveries or so by 2030. But I guess that will depend a lot on the next gen models from Tesla, how desirable they are for people, if they accommodate, what people are looking for in a vehicle. You can't just offer a cheap vehicle that nobody wants, right? A cheap vehicle nobody wants, nobody's going to buy it. You have to have the affordability aspect, but also, something people want, like a 2-seater that's never going to do well. Hopefully they're, 5-seaters. 7-seaters would be great, something, add that option maybe for people. But if you give people just average $25,000 car, Tesla, with the technology Tesla has, it will do very well. And I think Tesla will be able to sell 10 plus million vehicles by 2030, and let alone robotaxis, full self-driving, energy, or anything else, Optimus by then. just this alone should make you a lot of money in Tesla stock. Option activity in Tesla yesterday by big money was overwhelmingly positive. In fact, you had a positive order value of 100%, 5 orders totaling $1.78 million. The actual amount in option trades on Friday was a lot more than that. So I think Ortex is just having a hard time aggregating these numbers because, well, what I can see on individual trades is numbers that are much higher than $1.78 million. And if you guys have not watched the last video that came out here on the channel, I highly recommend you guys watch that video because essentially there is a lot of bullish option positioning in Tesla by big money for the next couple of weeks. You're talking some trades are millions of dollars targeting 185, 190 from now until pretty much June 21st. That's a very speculative, risky trade to put on if you're a hedge fund or institution. You're really looking for an outsized gain there, meaning that maybe someone knows something that we do not yet. Maybe there could be some news coming for Tesla pretty soon. Google Trends data today continues higher for the Cybertruck, and I really think it's just a matter of time before the real halo effect kicks in for the entire Tesla brand as the Cybertruck just continues to grow in popularity out there in conversations in Google Trends data. The Cybertruck recently went from 71 to 77. The Model Y recently seen a spike from 24 to 42. Now it's at 37, so still very elevated there, but falling a little bit. Model 3 has went from 24 down to 23, so a little bit of a drawdown there. And the Model S and the Model X are staying the same at 11 and 9. I personally think Google Trends data is probably the best thing to look at to gauge what demand probably looks like in the US. Right? If Google Trends are doing well, exploding like they are now for the Cybertruck, for the Model Y, then that suggests you're probably going to have a pretty good quarter for this current quarter. Now, it's possible you don't, but I think it's going to be pretty good. And last quarter, we've seen really good Google Trends data as well. That did not translate into a better than expected quarter for Tesla. A lot of that was the production delays and problems we had in Texas as well as Fremont. Fremont, it was the Model 3. Texas, it was the Model Y production that was just a little slow, and the Cybertruck that's still trying to ramp up and scale as well in Texas. So as long as those issues are gone, which it looks like they probably are, then deliveries should look pretty good. Now, Tesla's stock on a technical basis had a very good day on Friday. You got above your 20-day moving average, which is a great sign for short-term momentum, and especially considering it was a Friday and it's going to be a long weekend at that, the fact you got above that 20-day moving average is a very strong sign. Typically, traders don't like to hold positions over the weekend, but especially a long weekend, there's a lot more risk there. There's a lot more theta decay there, especially if you're trading options. And overall, you tend to get either up Friday, up Monday, down Friday, down Monday. So looks like the start of next week could also be on the strong side, considering Tesla's up 3% on Friday alone. Now, you do have a couple levels of resistance coming up. One could be around 180 and then 185 with your 100-day moving average. And then you could be looking at one here at about 188 and then $200. Things get exciting if you get above $200. Then all you really have is this 200-day moving average here at 213. And if you get above that, then you're looking at those exponential gains. Now, you do have this trend line that could be something to watch out for. That's roughly around 225 or so. But I think a lot of us would be happy if Tesla went to, 200 plus anyways, at least in the short term here. And I do think that is a potential outcome you need to be prepared for over the next couple of months. I think Tesla could go well into the 200s. Know all of the catalysts we talked about earlier in this video, June 13th being a big one. Around June 20th, Tesla's next earnings. July 31st should be, in my opinion, the first cut from the Fed. We're going to have 2 more inflation reports by then. If they continue to show progress on inflation falling, then we should get the first cut July 31st. Or if the economy weakens, in which that may not be a good thing for markets. If the economy weakens and the Fed starts to cut rates, people might, well, panic a little bit. And then you have August 8th, which is probably going to be the biggest catalyst of all for Tesla. So we'll have to wait and see. This summer, though, should be very exciting for Tesla. And I think now could be one of the last buying opportunities that you get with Tesla stock under $200 per share. I would be like egregiously surprised, ridiculously surprised if Tesla is under 200, 220 by, let's say August 8th. If we get through all of these catalysts, which I'm expecting all of them will be positive, bullish catalyst, and we're still under the 200s, I think the markets are probably going to be in a pretty rough place at that point. And that's something that's a little bit harder to forecast. But looking at Tesla specifically, I mean, how could you not be bullish right now? I mean, let me know down below in the comment section if there's something you're looking at or something you're bearish on, because I think it's just hard to see at this point. I think basically all of your bad news is priced in to Tesla stock, and I think pretty much none of your potential good news is priced in. That's a pretty good scenario to be buying shares of Tesla stock right now. And yes, for everyone that asks, is now a good time to buy Tesla? Yes, I think anything under $200 per share is a fantastic price point to buy Tesla. Obviously, the lower the better, and I think that will, keep Tesla stock from falling too much. Really, no matter what happens, people want to own Tesla when you get down to 140, 150, or even 160. You were not in the 140s for very long. So that is it. That is all for this video. We did not have much for news today. So let me know what you think about all of this information down below in the comment section. Hit the like button and subscribe to the channel if you made it to the end of this video and or you are bullish on Tesla stock. If you guys want to come trade with us live in real time, every time I make trades, I do send out alerts. Come join the action over there. Down below in the description of this video is the link for it. Enjoy your Memorial Day weekends. Let me know what you are doing for your weekend down below in the comment section, and I will see you in the next one.